Welcome back, everybody. You are on the Decentralized Tech live stream / I think the web gaming live stream. I think it's almost everything today in terms of what we're going to talk about. So first of all, this is going to be an awesome conversation. I've got a great guest with me here. It's Tuomas from Collector Crypt, and we are going to get into internet capital markets, real world assets, collectibles, compute capital markets, because I'm going to mention what we do in relation to all this, and collectible capital markets. So there's a lot to cover here. There's also a really interesting backstory to this. So Tuomas and I share a couple of really interesting things, more than a couple of things. One of our things that we share is a love of Magic the Gathering. So I started collecting them. I got Mox Gems and Black Lotus back in long ago. Let's just say I sold mine way too early. I wasn't the smartest one to hold on to them. I think they're probably trading around on Collector Crypt right now, but but I had those. We have been talking to each other for years. I'm actually an advisor to Collector Crypt. I started something like 4 years ago. So we've been on this kind of a similar company journey, different companies, but similar journey into our token launches. And of course, Tuomas also launched with Metaplex Genesis just a few weeks back. So that's what we're doing in another week ourselves here at Beamable. So we have a lot to talk about. I think we're going to drop some massive alpha. We're going to talk about tech. We're going to give you an insider view into what it's like being an entrepreneur, just kind of entrepreneur to entrepreneur in this market. So we got a lot to cover. Without further ado, though, Tuomas, why don't you just introduce yourself? How did you get to this point in time? And we'll talk about Collector Crypt a little bit more in a moment. But what's your journey into crypto and startup land?
Yeah, thanks for incredible intro. My guys are complaining. I haven't given them a clickable link to the show, so I just dropped it in the chat. Sorry about that. Yeah. So I think in many ways, collectibles and crypto kind of like hit the same happy place in my brain, and maybe that's kind of where I'm sitting in the seat that I am in now. So I started out, very similar to you, John, collecting Magic the Gathering in the early 90s. I started playing in 1993. I never really got to open up much alpha when it was out, because when it was like newly printed, because I think alpha just like really sold out super fast, and I was only able to buy kind of alpha on secondary, but I did manage to get myself a beta box, and I managed to get myself a couple Arabian Nights boxes, and one of my cards that I had originally, this is a card I opened up in a box in like early 94 or late 93. So it's pretty incredible, and this card now, obviously a lot of other cards have surpassed it in value, but my original Magic the Gathering deck had 4 of these, kind of built around this card and all that kind of stuff, and I keep it with me here next to my desk because it's the easiest thing that I can do on a daily basis. I just pick it up and I'm like, oh man, look how far, these things have come, and look at the platform we're creating, and look at all the joy, this card brings to me. Right. And so like, I keep it right here, and I don't think my story is atypical. I think everybody, has these cards. They look back on their childhood. They kind of remember moments when, good or bad things happened. I remember the time when, somebody ripped me off, like stole my $200 card or something, right? These are all like important lessons that we kind of collect, and the cards kind of help us trigger those memories and help us get it back. So, I think early 90s got into collectibles. I mean, you could tell I'm very passionate about them. And I went and did my entrepreneur thing. Started out in high tech and software in the late 90s, then got into biotech in the mid 2005 time period. And then my biotech career as an entrepreneur, I did that for like the next 15 years. But, I kept on dabbling in collectibles, and then blockchain came out in 2009. Started hearing about it. My friends started using it, and I'm like, this is the dumbest, stupidest thing ever. Like, why are people paying so much money for this, and why are people so excited? And then there was a moment in time in 2013 when the Bitcoin crashed from $1,000 down to around $200. And I said, all right, now that it's down 80% and all my friends have left, I'm gonna go and try it out. And so I started mining Bitcoin. That was kind of a waste. I think I was making like $5 a month mining Bitcoin or something like that. And but it helped me learn a lot about it. And then when Ethereum came out, I said, oh wow, this smart contract concept is really, really good. So I got heavy into Ethereum. 2016, I remember, crypto kitties breaking the Ethereum blockchain, and I'm like, that's stupid. Why are these people trading? And then it started to like sink in. I guess maybe I'm stubborn, but in 2017, hearing about CryptoPunks, hearing about using NFTs as real world assets, and by that time, I had a massive Magic the Gathering collection, and I'm dealing with all of this friction from eBay, all this friction from everybody else in the world trading and ripping each other off and all this kind of stuff. And I'm like, wow, I think real estate on chain is going to be really hard. I think finding 1 million real estate agents, convincing them, a 20-year-old convincing them, hey, we could put all this on the blockchain. You could get rid of title companies. You get rid of escrow. You could get rid of all this stuff and just put it in the smart contracts. You tell that to like a 55-year-old real estate professional. They're not going to give one. I don't know if I could curse. One.
You can.
About what you're doing. And so like a lot of those startups failed. And my idea, like watching this whole thing grow, was, if there's one place, like blockchain is very interesting. If there's one place that is extremely low regulation, where there's a tremendous amount of friction, where there's a real opportunity to disrupt incumbents, collectibles is where it's at. And I was already doing cards. And so 2017, we initially had the idea. But then you kind of take a step back and say, well, how do wallets work? I was still using command line to interact with Ethereum at the point. How do wallets work? How do you on-ramp fiat? How do you go and trade these NFTs? I don't know, many of you remember, but CryptoPunks actually predates a lot of the NFT standards. And like most CryptoPunks you trade on OpenSea are wrapped CryptoPunks. It's kind of weird. And then, of course, ETHROX had their own marketplace. So all these NFT projects had their own bespoke contracts and their own marketplaces. So just imagine, trying to do everything at once. And so we kind of put it on the burner. But then in 2021, DeFi summer, or 2020 was DeFi summer. That fixed all like the stable coin and fiat on ramp, gave more trust in Tether and USDC and that kind of stuff. And then 21, you had NFT marketplaces, you had OpenSea, you had Magic Eden, you had all these kind of things. Oh, sure. Thanks. All these kind of things coming up, and essentially, coming together with the infrastructure layer that we needed to launch our platform. And then the piece that was left was creating kind of this physical to digital bridge, right? How do we vault these cards safely? How do we, let people, interact with the platform in a safe way that doesn't dox them, all this kind of stuff? And then how do we make this efficient? And that's kind of what we spent the next, 2 years building until we launched. And it was, great to pick up some awesome partners like Magic Eden along the way. Famous Fox Federation was a big supporter of ours early on. Degen Apes, we love all of you guys that helped us, kind of grow our community and ecosystem to get going.
So let's zoom out the camera lens a little bit, because I want to talk about the bigger picture in crypto and Solana ecosystem specifically, because Solana has really been driving this narrative of what they're calling internet capital markets. Really the idea that everything becomes digitally tradable. There's markets for everything. It's a global trading network, so to speak, for all different types of assets. I remember when I first heard Tolly speak about this a few years ago, he kind of, the original version I heard from him several times was like NASDAQ, but open. But of course, now it seems like it's grown a lot more with this idea of not only that, but kind of tokenize everything, tokenize all kinds of assets, even create new types of asset classes. And I think both of us are doing this in our respective startups. So Beamable is a company that builds gaming technology. But more broadly, it's really compute technology. We could ultimately sell compute to anybody, but we're focusing on this vertical of game developers because they have a lot of very common requirements that are also very challenging to support, and they pay a lot of costs. And when they go down, like Amazon did last week, then they're out of business, and they've really lacked an ecosystem. So there's all these reasons for it. High level, what we want to do is turn compute itself into a new asset class. So it's possible to take compute and have fungible units of compute using technologies like lambdas and microservices. We don't have to get into that piece, but there are little pieces of compute which you could think of almost as like the energy from the power grid, except this is computer energy. And if you wrap that in the right smart contract architecture, then it becomes tradable. You can have market forces that price it. You can scale up and down your needs. You can stream it to applications based on what you need by buying it off a market instead of going to centralized providers. So that's our vision. And I think compute is an example of a capital market that doesn't actually exist yet. There's a capital market for energy, but this is enabling a new type of capital market. I feel like you're kind of doing the same thing. We use this phrase in promoting this particular episode of collectible capital markets. I guess, so kind of two-part question is, what do you think of that as a capital market? And how is that different than the fact that people just go around and trade things anyway? Like we've had a market for collectibles. What is blockchain doing that's new?
Yeah, great question. So, I mean, I think even going back to the early 90s, a big part of, the excitement around TCG is the T part in it, right? So these are trading card games, right? And when you start to trade things, they also kind of collect financial capital, right? They collect this type of worth to it. And, for a very long time, if you go back like 150 years, you have baseball cards and you have that kind of stuff. People are trading them kind of as a hobby and because they enjoy it. But then there's also, nodes in that trading network. And these are people that are actually doing this for a living and doing this for a business. They'll go to a trade show. They might have a list of 20 cards that people at home want to buy. And they'll go in and buy these cards and make a small margin on it and bring them home and say, oh, look, I got you your 52 mantle. Right, I found this for you. So it's like that excitement and thrill of the hunt. And so when you think about there's the mantle. When you think about like, collectible capital markets, it's really, what is the financial web that kind of surrounds these trading card games or these collectibles broadly, and what are the current kind of like, taps and sinks in this kind of like web. And, right now the taps are the manufacturers of the trading card games, right? So the guys that actually put them in the booster packs. Another tap is the, this didn't exist 40 years ago, but like the PSAs of the world who are taking cards and they're authenticating them and they're grading them. And by virtue of doing that, they're increasing the value of that card. Sometimes they're destroying value in that card. But, the whole idea is that you have inputs coming in here that each step of the way kind of makes this more efficient to kind of trade, makes it safer to trade, makes it do certain things. And then over the last 30 years, you have eBay coming in, massive, like $40 billion company. And they essentially, broke down a lot of the physical barriers around the cards and also a lot of the trust barriers. And I think eBay did a phenomenal job revolutionizing kind of like how cards are traded. Now anybody around the world could go in and find what they want. And yeah, they pay eBay a fee for it, and then that card gets transferred, and there's some safety. There's some idea that, hey, if I don't get what I was promised, I have somebody I could go complain to. And that complaining process is hard, but like, if you're in school and you're in 6th grade, if you're just complaining all the time, you'll probably get beat up too. So I think it's a nice system that they built, but it also serves as kind of like an extractive layer to this. And the whole really cool thing about decentralization is that we can go in and stop being a middleman, right? We could go in and empower everybody to interact directly with each other through smart contracts and on chain. And then as a service, we can charge a little bit for allowing that to happen. And I think, that is it's a subtle difference between being kind of like an eBay versus, being the technology and infrastructure provider to allow anybody to kind of go and do this. So when we think about evolution of collectible capital markets, we're thinking about this whole, web of new infrastructure that is being built. And not necessarily by us, right? So we're focused on the physical to digital bridge. And yeah, we've built some applications on top of that, like our Sniper marketplace partnered with Magic Eden, our Gotcha machine also partnered with Magic Eden now, and a few others that are coming up. We've kind of built that infrastructure, but the idea is that anybody out there can now go in and build on top of that as well. And they can go in and provide utility. They can go in and provide services for these users to interact in that web. And this web, is going to continue to grow until it captures, 20, 30, 50, 100% of people in the global economy of trading cards. And, I think that is, when you think about what this will look like 5-10 years down the road, and you compare it to what, eBay and some of these other Web 2 marketplaces look like today, it's kind of like, I have a hard time kind of describing it. I don't think the words have been created yet, but, an open, permissionless, very low cost, instant settlement. These are all words that kind of dig into that in different ways. And, if we think this is, if Toli's running around saying, hey, we want to do this for stocks, I don't have such a hard time trading stocks, but of course I live in the United States. Right. So I'm fortunate to do that. But globally, people have a very hard time buying a share of Tesla, for example. But if you think about trading cards have an additional layer of complexity over stocks. And so the ability for blockchain to be a key to solve this friction in the trading card space, I think you can have a multiplier on top of anything you can do with more liquid traditional financial vehicles like stocks, bonds, that kind of stuff.
All right, we're going to dive into a lot more of the tokenization stuff you just said, because there was some gold in there, especially around what you touched on, composability. And I want to talk about that a little bit more, because I think that's one of the huge wins of tokenization. But I want to do just a quick program identification for people who've just jumped on. We got a couple hundred people in the live audience here on X who are watching us right now. And I see, Tuom, that you have a great community here. They're piling in to talk to you. Welcome to my live stream. Glad that you've gotten to know Tuom here, and I look forward to getting to know all of you. There's a reason why we do this live, by the way, which is all of you, so that you can actually come in here and not just say hello, but ask questions, actually be part of this. So you don't always get access to the founders of any company, game companies, tech companies, AI companies, collectibles companies. Those are all examples of the kind of people I've had on this stream. So we would love to have you ask a question. I'm perfectly capable of sitting here for approximately 5 hours, even though we only have 40 minutes left. So I could ask questions, but I really get a charge out of you asking questions and you participating. So please ask them, be part of this. It makes it a lot of fun, and you get to learn something, and it's better than watching this thing in replay because you were part of the actual conversation. So just as a reminder, I'm Jon Radoff. I'm one of the founders and CEO of a company called Beamable. We're building a compute capital market. We're focused on games. So games need a lot of compute capacity to run, mostly in the back end in the cloud. They're spending billions on this, and that's the target market that we're going after, Web 2 and Web 3. Tuom is building a collector capital markets product, which we've been just talking about. There's another capital market too, Tuom, that we've both been adjacent to, which is just the capital raising market, right, for a startup. And if you can conceive of a way to create a protocol, and I want to return to protocol more specifically around composability and stuff, because you were just touching on that in a really interesting way. If you're really building a protocol where it is open and there's a value exchange, and you can imagine these peer-to-peer interactions, it is a whole new way to then tokenize and also use the token as a as a means of capital to help fund more of that protocol development. So we're both doing it on Solana. You did it a few weeks back on Metaplex. We are doing it in exactly 1 week on Metaplex. So we're going down the same path in terms of how to approach it. I'd love for you to talk a little bit about like whatever you're willing to share. And I know there's so much that sometimes you might not want to share of this experience, but what can you share that you'd love everybody to know about? And also Metaplex. I'll just say I love those guys over there. I think they're a great team to work with, really great builders in the Solana ecosystem. Why Metaplex for your launch and the token sale that you did? Is it a couple months ago now?
Yeah, it's been a couple months. We just our people in our token chat, I'm sure, are saying, "Why is your token down so much?" And it's because we just had our second VC unlock, and people are waiting for that unlock to go through. Yeah, Metaplex. So we've been looking to launch a token. Oh, hey, Nick. We've been looking to launch a token for like 2 years, and we've chatted with a lot of launch pads. We've chatted with a lot of exchanges, and it just felt like a dirty experience. And I'm not saying they're all bad. There's some really good people out there. But, when everybody is kind of like wearing the same clothes, has the same, earring with a skull on it, and has the same tattoos looking mean in the back of the schoolyard, you're kind of like, well, this is kind of the ecosystem that exists. And that ecosystem until Metaplex was, all right, you go in and you're going to give the launchpad a bunch of tokens. You're going to go in and give a bunch of KOLs some sweetheart deals, right? They're going to go in and talk to their audiences and really try to pump up excitement of the token. There might be some under the table, wallets that get some extra tokens for doing certain things that are not disclosed. And the whole idea is to essentially launch the token with a very low kind of float, and then have people buy in, including yourself and your market makers, buy in to get the token to a 30 or a 50 or 100x, right? And then it's like, wow, look at this platform. They exploded. They made a 100x from launch price. Like, how many people actually got in at that launch price, and how many were actual people in the community? The answer is very few. Like, most of the people that got in at launch price are insiders or the market maker or the launch pad. And then as that token pumps up, they're the ones putting the sell pressure on it, right? And the whole idea is to generate as much treasury as you can as quickly as you can, and then you have enough money in your token that if whatever happens to the token price, you'll survive. And eventually, when you actually have a product that goes live, maybe it's good, right? So I remember there's this one launch that did a 30x up to like almost 700 million in value, and they had opened up their repository on Reddit like a week before the token launch, and they had like 3 lines of code in there. And this was a brand new team that had only like come up with the idea 3 weeks before, and they get us like it was just nonsense. And guess what? That platform disappeared 2 months later, as did all of the money that went into that launch, right? So Metaplex saw this, we saw this, I think Toli and Raj also saw this, and they kind of went to Metaplex and said, hey, let's try to figure out a better way to do this. And so, there were a lot of, like I said, not everybody was bad. And there were some really good mechanisms like the launch pool, like reverse auction, some of these other things that were developed over the last 5 years in terms of how to launch a token, but they weren't really put together in a transparent, honest, systematic way by one of the most high integrity platforms that exist, right? So I think that's what Metaplex brought, is this layer of integrity, this layer of trust. To say, well, we're not going to do any of that, this nonsense about like, a 30x, 100x on launch and under the table deals. We're not going to do any of that. We're just going to give you the most transparent way to pre-sale a token, right? That is fair to everybody involved, that is fair to the platform, fair to the user, and then we're going to see what happens. And so we were the third platform to go out. And, it just worked beautifully. I mean, like, there was some hair on the edges because we were the first ones using a launch pool mechanism. And we were the first one that also launched the actual token within a few hours of that launch pool closing. So there was just a lot of insanity that had to happen there. And, nobody even saw it because Metaplex did a beautiful job. And so, I can't speak more highly of their team and what they do. And, this is probably not kosher for me to say, but I think they do a phenomenal job selecting the best platforms to launch with. Right. So, obviously I'm speaking about our own platform, but, everybody else is like, I've been following John's story for like, 4 years. And, he just has an incredible level of integrity, and he's building an amazing platform. So, I was super stoked to hear that Metaplex chose to work with John and help him launch the token.
Yeah, we're excited about those guys too, and everybody on the team is great there. And I think that the thing everyone needs to understand is Metaplex is different than like a launchpad. It's a protocol, and doing a TGE and all the steps that are involved, and whether it's doing any sale of tokens that you want to initiate all the way through like seeding liquidity pools, and then like there's a lot of things to do there, and typically people are sort of doing this as a very manual process, and then more often than not these days they've been doing it with centralized exchanges can do a lot for you for sure, but depending on who you go with, and I'll refrain from naming names, but depending on who you go with, it can either be great and fair, or it can be highly extractive. Like extractive from everybody, like your users, your community, your token holders, definitely the entrepreneur, everybody else kind of gets behind them. So that's kind of the dirty landscape that's out there for launches. And what I like about Metaplex is it's really building technology that puts it in the hands of the startup or project to do their own launch process, essentially. So I think there's something really powerful to that's kind of what I think about as the capital raising piece of this whole internet capital markets aspect, which is really democratizing access to capital and democratizing some of the tools of the capital raise, and something that I really respected about that. And once I saw that, and for those who don't know, Metaplex just hugely respected in the developer community for Solana as well. I agree with what you said, like it's somewhat self-serving at this point, I guess, but definitely a much more curated process in terms of who they're working with today. But it gave us really one of the things I was looking for, which is how do we just lean super heavily into Solana ecosystem as well? Like everybody from the tech standpoint to people who are the Solana bulls, the Solana maxis, the trading communities, because it kind of opened up the gate to being able to work very hands-on with a lot of other aspects of the Solana community, that the overall internet capital markets community, whether it's DEXs and all these other pieces that all have a shared interest. And when we talk about tokenization, and I want to return back to our own platforms and protocols in a little bit, but one of the benefits of tokenization is the idea of also aligning incentives across multiple stakeholders. And I think that this is a good example of that. When you have all of these intermediaries, middlemen, like the whole kind of crazy launch process of going to the path of the centralized exchanges, said we're probably going to be on some centralized exchanges that we thought made sense for us. But there's a lot of middlemen in the process. There's a lot of value that kind of gets subtracted just to get there. And the token, when it's on chain, does have a lot of benefits in terms of weaving people together in a much more coherent way than all the extraction that can happen off chain. So that's just one of my thoughts there.
Yeah, I would echo that. I mean, launching the token has just been an incredible net positive for our platform. I mean, it's not only, helped us kind of like get some escape velocity for what we're doing. I mean, like we launched the token and I was on like 20 podcasts in the next week with some, really notable people like Laura Shin and, Thread Guy and some of these, all of my heroes. I was finally like, I was there, and it was just an incredible moment. And that just gave us phenomenal exposure. And now, when we launch something new, everybody hears about it. Like before we launched something, it's like, wow, not many people heard about it. Not many people care. It's a really cool thing. and that really helped us kind of build our core community. Like some of our, mints that we did on Magic Eden, 2 years ago, helped us really kind of like figure out what our product market fit was. But now, now that we've had product market fit, we're able to kind of go in and say, okay, how do we grow? How do we expand? Where are our weak points? Obviously, like many of our users have seen that, oh man, you guys are taking a long time to ship stuff out. What's going on? And we're like, well, we're now the number one, user of both PSA Vault and Fanatics Vault, and they can't keep up. And, so we have to really figure out a solution to that, because right now, all of our revenues are only Pokemon cards, right? And Pokemon cards are like 1/3 to 40% of total trading card revenue, right? And if we're hitting, these blockers and these barriers and this friction when we're just 1/3 of the, this very limited market opportunity, and we're also growing at the rate that we are, what are things going to look like 12 months from now when we have sports cards, when we have all this kind of stuff going? There's no way that the vaults that we have will keep up. So, this has forced us to, really accelerate some things that we're doing on our side to make the platform better, make it safer, and make it cheaper for our users, right? Because obviously we have to pay PSA and we have to pay Fanatics for their services, right? And they have to make money, which is fair. But, these are things that we can do ourselves and do it in-house and provide a better user experience. So like, what you're seeing here with this token, and I think people, it's hard to really appreciate. I mean, I've been in, like, I've tried to take companies public, and I've advised on companies going public on NASDAQ and stuff. Once you get to that point, you're already kind of like, way beyond initial tranches of funding, right? You're way beyond everything that you're doing. You're hopefully, generating 50 to 100 million in revenue per year. You're hopefully doing all that kind of stuff, right? And what we have on blockchain is the opportunity for community and users, your first users of the platform, to actually have a bite of the pie, to actually like be a part of, hey, I remember you guys when you did your first mint on Magic Eden. I remember, you always complaining about how you've never been paid in 2 years. I was there sitting on that AMA that you did back in that day when you said, oh, we're going to do this. And that was awesome, right? So you have an ability to kind of like participate in a meaningful financial way in the growth of a platform, but also, really participate and have a seat right next to the founding team to go and do it. And I'm not saying that that's an amazing thing. I probably smell bad right now and you don't want to sit next to me. But
this beard is only this length because I don't have time anymore to take care of myself in the course of a token launch, which has been going on for quite some time. Because when you get on this path, it's not like you learn about it maybe a couple weeks before, but shit's been happening for like months and months and months to even get to that point. So it's so I empathize with you there in terms of the founder journey. We've been talking a little bit about different reasons to tokenize. One is just access to capital is a legit reason, and it requires certain kinds of company structures or protocols or things that can be tokenized. But when it works as a capital acquisition mechanism. We talked about when tokens can add more liquidity or add more access to a market. Those are other excellent reasons for tokenization. Much earlier, you touched on another one, though, which you talked about how people were building or could be building more applications around Collector Crypt. It's the same for us as well, by the way. Like Beamable is designed as an open compute architecture where it essentially just streams compute to whatever software applications. We've focused on games, but ultimately we'll be making this available to anybody who wants to use it. And you just consume the compute and you can build on top of it. So if there's other applications that you want to coordinate with that also need to consume compute, you have a more market-driven way that all of these applications can collectively consume compute and deliver the ultimate application to your end users. So why is this important? So in traditional tech markets, sometimes you have plugin architectures and stuff like that. But the thing that was left out of the internet is this idea of value exchange as more of an internet primitive. So what do I mean by that? I mean basically payments for services. So when we designed HTML and email and things like that, these are client server protocols, but there's nothing inherent and peer to peer like those protocols are, like HTML, HTTP servers, web browsers, essentially a peer to peer process. Your web browser connects to a web server, you exchange data in the middle, right? Gone are the days of America Online, like coordinating that and telling you what pages you can see or what content you can see, and they figure out how to extract value out of the whole value chain. Web clients and web servers just connect with each other. There wasn't any thought towards a value exchange protocol that goes hand in hand with things like HTML. Now, yes, of course, you can put credit card payments on a website, but that's a gated protocol. That's not built into the protocol. It's not peer to peer. When you make it peer to peer, you can actually open up a whole ecosystem of people who build around your core capability, extend it, and share in that core value exchange protocol. And I think that is actually remains one of the most underappreciated aspects of blockchain and smart contracts. Now, where you see it mostly today is the realm of DeFi, for example. So DeFi was sort of one of the earlier innovators of like this idea of financial Lego bricks that could stack together and create all kinds of different financial products. So we have that, but it doesn't stop at DeFi. It's literally everything that has value exchange. Tuam, can you just talk a little bit more about how you think about that, and also just maybe your vision around it for Collector Crypt? And just because I want to give people examples of like the power of composability or programmability that tokens brings to the table when you have this capability.
Yeah, absolutely, and that's a great intro to composability and the value of open kind of like architecture like this. So, and I'll just kind of chat with by example. Like one of the biggest innovations in DeFi were stablecoins, right? And people, go around and sit on, they're very highly paid, and they go up on a podium and they say, the only thing in blockchain that has product market fit is stablecoins. And here's why, right? And they say the same thing, and they get paid $100,000 to get on stage to do that because they have a recognizable last name. But I think it goes way beyond that. And USDC and Tether are obviously two massive, improvements to kind of the financial rails that exist globally. And the way we think about collectibles are, we think about trading cards in a very same way that USDC thinks about their currency, right? So they go in and they vault all their US dollars and they make a little money on it. And then they mint these tokens that go onto chain that people can go in and build whatever they want with it, right? And so for us, it's not as kind of straightforward, but I'll give some examples. So we take all these cards and we stick them in a vault, and we mint tokens that represent these non-fungible assets on chain. And then what can you do with them? And the playbook is pretty simple. You could go into Web 2 and say, okay, what do people do with these cards in Web 2 that involve, finance, that involve trust and safety and security and vaulting and this kind of stuff? One of the first ones that come around is this idea around collateralized lending. And so, there are like probably around $90 to $100 billion worth of trading cards out there right now. And collateralized lending, is probably 30% pawn shops, right? So people go and take their dad's baseball collection to a pawn shop because they need to go and make a rent payment, and they get charged, 20% annualized on that. And maybe they get defrauded or ripped off or something in the process. I mean, I'm sure there's a lot of really good pawn shops out there, not trying to dig. Then you have like platforms like AltXYZ. There's a publicly traded company that does lending. And what you have to do for those guys is you have to take your cards, you have to ship them in, you have to go and get them, evaluated. You have to go and get them, you have to go and like submit a paper, like 5 pages of paperwork, and then the underwriters take a look at it. You pay a 1% of value underwriting fee. And then they kind of come back with this offer that says, okay, we will give you 15%, annualized interest on this, and you're going to pay that monthly, and that's going to go for 12 months, and you're going to pay 1% upfront, right? And then you have to keep it in for a minimum of 6 months, right? So this is, and that's just because the way underwriters work. That's just because of the way the financial system works. But with our platform right now, somebody could come and build a collateralized lending suite, right? They could come in and say, all right, we're going to build these liquidity pools. Anybody can deposit funds into liquidity pools. And then if you want to borrow money against your cards, take your collector crypt cards, stake them into the contract, and then you'll be able to borrow, up to 30 or 40% of, market value or insured value of the card. And you don't have to fill out any paperwork. You can borrow it for 5 minutes and then return it. You don't have to pay this 1% underwriting fee. All this kind of stuff just becomes so much easier on chain. And then, of course, the whole mechanism to say, all right, what happens if I don't repay the loan, right? In standard world, it bankrupts companies. That's kind of what happened to, PWCC back a few years ago. They got acquired by Fanatics because they lent out too much stuff and their loan book got upside down, right? And they didn't have liquidity. They didn't have this kind of stuff on their cards. But on chain, you could have automated protocols that go in and take these cards, list them for a 10, 15% discount on the marketplace algorithmically. Or you could go and say, well, hey, let's take these cards once they're default. Let's put them in the gotcha machine. Or let's, list them for sale at a discount price. Let's do an auction. Let's do all of this kind of stuff. You could do that all algorithmically, and you don't even have to lift a finger if you build the code up front to do it. So these are all opportunities to, kind of go in and build. And by the way, you don't even need our permission to do it, right? That's what this whole composability idea is that once these cards are on chain, the only control we have is if somebody comes in and wants to redeem the card, right? And we could build platforms around it. Anybody can go and build their own gotcha machine, as we've seen, right? And they could use our cards, they could use their cards. What becomes valuable is the source of truth and the source of trust. And that's around, whether this card is actually on chain and owned and it's in a vault and you have, physical guarantees over it, or whether it's are you valuing this card appropriately? Are there mechanisms in place to make sure that this card, the insured value and the marketplace value, are accurate, right? So these are kind of things that, I think there could be a lot of improvement, both by us and by others, to go and do it. So I think I mentioned probably 5 different platforms there in the last 2 minutes, but anybody can go and build them, and anybody can go and join our ecosystem, which is growing at a phenomenal rate. And I think you see with the partnership with Magic Eden, we're probably going to announce a couple smaller things in the next few days. There's going to be another announcement about a collaboration on Base coming up. And we're just kind of working towards continuing to build on these Lego financial bricks around this kind of collectible capital market concept that we've come up with. I hope I captured that without talking too much.
Yeah, I love it. Here, I'll give an example from my domain, and I'm going to give a quasi-financial example that might even scare a couple people in the audience when they hear about how stuff really happens. But this is the program where we really get into some of the alpha. But I also think some of you will think it's pretty neat based on the kind of audiences we get. So a lot of you have probably played free-to-play mobile games. You go to the top 10 free-to-play games on your mobile device. You have the opportunity to buy usually a currency or some items. The price that those items have, the bundling, and the exact time when they hit you to propose that you buy from them is not random. It wasn't like the designer was like, this looks good here. No, that is heavily A/B tested, multivariate tested, and with machine learning, and for most of them these days, machine learning algorithms behind the scenes, consuming everything about the play patterns, figuring out the exact price elasticity, and converging in on the exact price and bundling strategy to maximize revenue. This is why some of the top 10 in free-to-play mobile, by the way, have such wide moats, because their margins are better than anybody else. They have the data resources to do that better than just about anybody. The cool thing about what we're doing and thinking about composability is actually making those tools available to anyone so that you can level the playing field. The things that make it hard to do for a smaller game studio or gaming startup is, number one, the tools that do that kind of machine learning usually require a lot of expertise. They require software that has to be bolted on to various data languages, because if you've built this stuff yourself, you've almost no doubt built your own custom data language describing things like your users and items and transaction histories and things like that. So when it's all custom like that, you don't have a common data language, and you don't have a way to easily provision the compute, the considerable compute that's required to run an algorithm like that. You're really just building yourself. And when I've seen people take this problem on, it's usually like a $500,000 project. You usually have to have like a data engineer, a data scientist. Like, it's very expensive expertise to deploy these systems. But if you have a standardized data language and everyone's building around a common modular set of systems for things like buying stuff in games and user histories and transaction histories, and you have a scalable compute platform that can just scale up and scale down whatever the machine learning workload is in the background to study this as your players are doing it, then someone could come along and make a price optimization or a shopping cart plugin for your game that, instead of it just being the one-off that cost you $500,000 before you found out if it worked, it's just shared with everybody. So that's an example of something that, if you have a compute capital market for access to compute and a common language and sort of the tooling around it so that everybody uses same systems and that's standardized and interoperable, you start to like really create this whole software development ecosystem that ultimately people can build with. And it includes other things that are more end user focused, like matchmaking, social systems, all of that as well.
Yeah,
So,
I remember a few years ago having a conversation with you about like Beamable, and at the time, like, there was this whole, all this excitement around, Web3 gaming, and it was like, but John, like, everybody's making bad games, like everybody's making like C minus level, mobile games, and all they do is they add like some way to like do a transaction on the game. And I think it's exactly what you're saying here, is they didn't have the infrastructure or the resources to kind of go in and one, build a good game, but two, access the layer of compute that they needed to be able to get there. And I really applaud you for, like, it took a long time for all these bad games to come in and go out, and they raised a lot of money and they extracted a lot. And if they had, Beamable 3 years ago, I think, the quality of the games would have been better. The engagement would have been better. The data and better founders, I think that would have all flocked to the ecosystem. Nobody wants to like build bad games, but like, I think they just had no choice because they were trying to like chase the crypto capital. But if they had Beamable, they would have been doing a much better job at it.
yeah, I mean, look, a few years back, there were too many finance bros with an idea of having played Diablo 2 and said to themselves, hey, let's strap blockchain on top of that and make a lot of money. And didn't really know what they were getting into. That kind of describes a lot of teams just a few years back. So making good games takes a long time. It requires a lot of iteration. It requires a lot of velocity in your development. And the business model has to be really thought through quite carefully. And Web3 is inherently a new business model. It's not just the same games with free to play with a blockchain based wrapper around it. Like, the way you have to design a game for an open economy is completely different. Like, imagine Magic the Gathering if you could only play the cards that were in the box and you weren't allowed to do deck building, right? And you weren't allowed to sell the cards because some hypothetical, I don't know, lawyer from Wizards of the Coast would show up every time you tried to sell the card because you were violating a license agreement with Wizards. That's in fact how every free to play. I just described how free to play games work. or most MMOs for that matter, right? Like, MMOs in the early years, before they knew people are going to try to trade things, they actually tried to enforce this stuff legally, and a lot of them, like to this day, World of Warcraft has teams that are set up just to prevent people from selling gold, because it is a fungible currency within the game, and possibly shutting your account down if they find out that you're gold farming and selling. So that said, there are really interesting game designs. I don't look at Web3 as like just surrender and say people are going to do black markets anyway, so let's just give them the black market. That's not what Web3 is to me. It's actually design games that use open market economies and bring that innovation that came into Magic the Gathering and Pokemon and a few other games, and to like actually bring that into the game. That said, it's really hard to do. And you said shipping bad games. I want to give Web3 actually a little break for a moment, because the fact is everybody's building bad games. Like, first of all, most of us in the course of becoming game developers built a bunch of bad games along the way to learning the craft. So that's just the nature of learning any craft, by the way. So of course, if you have new developers in a market learning the craft for the first time, they're going to go through some pretty painful lessons in that journey. And by the way, 19,000 games were shipped on Steam, the dominant PC distribution platform, last year. I challenge anybody in this audience to name more than a handful of those. Now, if you can, you're probably some game marketing expert. But for the most part, you don't know that many games because, and I'm not even saying they're bad games, they're probably average games, right? An average game doesn't sell. Best game, like incredible.
I challenge anyone to tell me how to make a great game sell for sure, you know, with that signal to noise ratio, like even have a great game surface without like $1 trillion to force the issue, you know, so there is no secret sauce there.
I'm still an idealist, Oscar. So I think that truly really great games can go viral because friends are telling friends about how great it is and they just demand that you play it. So I still think that's a thing. It's hard to do. But the point I'm making is, like, there's a lot of bad games. There's a lot of average games. There's even a lot of pretty good games. But this is a really hard business, and only the really great games survive. And mobile, by the way, like 19,000 is nothing. Like mobile, I don't know how many hundreds of thousands were shipped last year, some countless number. And Steam this year, probably 25,000 games. So the amount of content being created only increases. So I think, at least for the people who had earnest intentions, which is not everybody in Web3 gaming, like some people did it purely as a rug pull. But a lot of people wanted to build in earnest and are still working at it. I give those people a little bit of a break because gaming is so hard to get right. And the best thing that I can do to help them, by the way, is at least help them focus on the fun of the game so that they don't have to do what I did when I built Game of Thrones, Star Trek, Walking Dead, Archer. I mean, we spent millions building the stuff that basically you can start building for free with Beamable. So
yeah, 100%. I totally agree with that take. And I think, you know, the place where I kind of like scratch my head is that a lot of these, you know, there's a ton of games on Steam that are great games that just people don't play. And then there's a lot of really bad games as well, right? And I think, you know, Web3 tends to go through these waves. And I think, you know, 500 or 1,000 games per month were like getting some type of funding on Web3 just because they were going to take this pig and put lipstick on it. And I think we went through like this very harsh learning cycle that, you know, just slapping Web3 on a game isn't going to make it amazing.
That's the other thing too, just to riff off that quickly, which is I think there was an assumption by too many people that Web3 was a gaming platform, which it isn't. Web3 is a game for gaming. Web3 is a business model, which drives a certain different type of game design to be successful. A platform is a web browser, a mobile device, a console. Now, when you're brand new to a new platform that's actually a platform, like I just described, the quality bar can sometimes be a little bit less. People will be looking for things to try. They'll tolerate the rough edges of your beta game. That can work in a new platform. It didn't work in Web3 because Web3 isn't a platform. It's a business model, and people would play the game and they would compare it against the quality bar of every other game that exists that they could be playing on the same device. So why would they play a much lower quality game when so many more options were present? So I think there were just some really super fundamental mistakes, largely on the funding side, frankly, like not understanding what goes into a great game.
That's a good point.
So, Tuom, we've got a couple of comments from the audience that I want to try to address. We've been talking away here. So, Tyler made a comment here about, the luck of K factors. Yes, by the way, like sometimes great games do need to get discovered. Among Us is a great example. I'm sure almost everybody here has played Among Us. I think it reached 150 million people, if memory serves me. So, to get that, though, I think it was like a year where they struggled with about 2,000 monthly active users. And then the streaming community discovered it, and people started to see it being streamed by major streamers, and suddenly it exploded. So that happens. That's kind of the weirdness of the game industry. We have another question here from Jeremy. Jeremy's had a lot of questions and comments. I'm going to scroll up and get to his, but yeah, I thought this was actually an interesting one of your earlier comments, Jeremy. Thanks for sharing, which is, as a founder, I'm considering crypto. So it sounds like you're not exactly crypto native from the dev side at this point, which is great, by the way. There's a great incubator out there called ICM Run, and I know a bunch of the people there, and one of their mandates is to help people that have more of a Web 2 background trying to move into Web 3 and launch a tokenized internet capital market startup, really enmesh themselves in the culture, the capital raising structures, all of that. So check out ICM. It's ICM.run. So Jeremy was also saying, though, so he's been thinking about crypto, but he's asking, is it good business or management to accept external resources? I think by resources, he means capital, to test before you test it, basically. I have thoughts on that. What do you think, Tuom?
I think to the extent that you can test it, with our gacha machine, our gacha machine, it's a very, very simple game, right? There's not much going on into it. And we kind of did a limited test. We did, every single small step of the way that we could to kind of like improve that and get good product market fit. I think, if you're thinking about like launching a game and launching a process to raise money, you're making quite a big investment just to go out and raise capital, right? That takes time, that takes effort. They're going to want a beta. They're going to want this. I think if you are able to, put on the blinders and say, hey, let's not worry about fundraising right now. Let's just focus on the game. Let's see if we could get like a beta out. Let's see if we get a test out. Let's see if we're able to kind of build some momentum and build a community. One, I think your game is going to, benefit from that. It's going to be a lot better because you are building towards what your users want versus what the investors want. And I think you're also going to, potentially hit that virality that Jon's talking about, that if you're able to, even if it's a limited version of the game, even if it has like 5% of your overall vision, if you can kind of get a core group of people using that and experimenting, that's a much more powerful set of data that you could use to go out and raise capital. So I think you should definitely test offerings first if you can.
Yeah. But I think, Jeremy, I'll answer your question a couple of ways from my standpoint. So first of all, it's perfectly ethical and moral to take capital, or for that matter, pre-sales, like on Kickstarter was another funding model that a lot of people have used for new business ideas, or equity capital from an investor, or borrow money from someone. Those are all versions of getting capital for your business. A tokenized protocol is another way of accessing capital for a certain kind of application. Like anything, like depending on your type of business, certain forms of capital are going to be appropriate versus not, right? So there's lots of startups that venture capital will not work for ever. There's lots of startups that tokenization probably doesn't work for because you don't really have the right structure for it. So I think if it's the right kind of capital for your business and you're honest with people about where you are in your business, and if it's just an idea that you have, then I think you got to tell people that it's just an idea and you don't have a lot of substance yet. Lots of things get started at just the idea, but you tell people. And then what are people going to look at? They're going to look at the qualifications of your team. Like, can you actually execute the idea? And that's, different factors will be looked at, and people with different kind of risk profile will consider participating. So I think as long as you disclose things and are honest about it and tell people where you are and bolster your case with what you bring to the table for success, totally fine. Now in crypto, a lot of people have had a history of being entirely aspirational in what they're creating with no real substance behind it. And people get caught up in the hype behind an idea when it's just an idea. And I think we just got to call on everybody in crypto land and in blockchain to, start showing more of the substance behind things. And also people who buy tokens, like, look into it, like, understand what it is, see if there's substance. Don't just jump onto things because you heard someone on X say it was a cool thing. So, that's my thoughts, Jeremy. But I think, of course, it makes sense if you're able to get capital for an idea, even if it's just an idea, just be transparent and honest and explain to people why that idea actually can become reality and what you bring to the table. All right, we've been at this for just over an hour. I feel like we could talk, as usual, Tuom, about so much more. But we've been talking about internet capital markets. I've been talking about compute capital markets. Tuom has been talking about collector or collectibles. Is it collectibles capital markets, or what's the word?
Collector capital markets.
Collector capital markets. Yeah, okay, makes sense. So different versions of collector markets, both on Solana. And Tuom did a token sale several weeks back on Metaplex Genesis on Solana. And we're about to do that in 1 week at Beamable for the Beamable network token. So not getting a lot of sleep these days. My beard is getting a little longer. I'm in a lot of conversations with other founders and people in the ecosystem. And frankly, I'm having a hell of a lot of fun with it, just not a lot of sleep. I'm on X. Look me up on @JRadoff. And Tuom, how can people find you or find Collector Crypt?
Yeah, probably the best way is on X, collector_crypt. We have a hop-in Discord if you like trading cards. We do a lot of discussion around Pokemon, and One Piece is getting very popular. Pretty soon we're going to be launching our sports vending machine here in the next few weeks. That'll be super exciting. Keep our fingers crossed, and then as usual, we don't overhype partnerships, and we don't try to go out of our way to talk about like all these exciting things that have a low likelihood of happening. So when we post on something and when we try to set expectations on it, we are, as Jon said, there's been a lot of work that goes into everything that we do, and I think you guys saw that with Magic Eden. I can't tell you how hard it was not to tell you guys about that, before it happened. But I think we told you on launch day that we were the ones helping them out. So, appreciate all of you guys for trying that out, and, just more to go. And if you guys are builders and you want to work with us, we're very easy to find. So just come and ping me in Discord, message us on X, and always happy to have a conversation. And you'll see the kind of stuff that we're doing. It doesn't have to be an astronomical thing, but I think the underlying kind of layer is that it has to provide some useful utility, has to provide some new thing for the collectible ecosystem, not even necessarily for Collector Crypt, but something that'll benefit the ecosystem is what we're looking for. So anyway, really appreciate being on here, Jon. I wish you the best of luck with your TGE next week. I'm certainly gonna. I'm not giving any financial advice on any of this, but if I could bet on Jon, I would always bet on Jon. So that's what I'll say about that.
That's really kind of you, Tuam. And if you haven't heard it yet, I'm going to be on a whole bunch more spaces and live streams, certainly for the next week. But tomorrow I'm on the Mark and Sonny show. That's running at 12:30 Eastern. I'm on the Interlinked podcast at 2 p.m. Eastern. I'm going to be on Frisk's X Space on Saturday. I'm basically jamming my schedule up with every live stream, every X Space that will have me. And I wish I could clone myself and be in even more, but that's where I'll be. So I look forward to seeing all of you online again, whether it's my stream or one of the other X Spaces. Thanks, everybody. This has been a blast. Tuam, thanks for being here. This was really fun.
Thanks for having me on, man.